Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Your whiskey beats your index fund because it never has a flash crash. Oil drops on Iran peace hopes before fresh U.S. strikes. USO bleeds red at $130, while GLD rips 1% higher. Gold rips not because of inflation drama, but because prosecutors just accused a former CIA officer of yoinking $40 million in literal gold bars. At the same time, a Google engineer gets charged for insider trading on Polymarket, a prediction market, front-running the crowd on political and geopolitical bets. Here's the punchline. The real adults now hedge chaos with weird assets and probability, while you still worship the S&P graph like a religion. Everyone stares at Nvidia at $214 and the S&P crawling higher at $754, pretending this is normal, while the actual risk signals are screaming from places nobody wants to talk about. Whiskey casks, rare wine, and on-chain betting on whether politicians blow up the world this week. Let me show you one thing nobody on CNBC will admit. Betting on outcomes and owning objects often survives shocks better than owning stories. First, the macro circus. Iran headlines peace, oil dips, then boom, fresh U.S. strikes. USO barely moves. That's not calm. That's a market drugged on liquidity and algos. Meanwhile, GLD leaps over 1% on a nothing day in stocks. That's capital quietly buying insurance, not against CPI. Against holy hell, what did Washington just do? Now drop in signal number 3. A Google engineer prints $1.2 million from insider trading on Polymarket. Not on Robinhood, not on call options. On a crypto prediction market where the underlying asset is truth about the future. That tells you exactly where the sharp money already plays. Not just betting up or down, but will this event happen, yes or no, by this date? Here's the cliffhanger no one in your retirement webinar covers. The same logic that makes prediction markets powerful is exactly the logic rich families quietly use with whiskey barrels and wine cellars. Prediction markets do one elegant thing. They force every dollar to answer a binary question with a timestamp. Will Becerra win? Will conflict escalate? Will the Fed cut by September? Every trade forces you to price the probability of a specific future. When that future resolves, the market settles to 0 or 1. Pure outcome. No vibes, no narratives. Just you were right or you were wrong. Now look at fine whiskey and rare wine. They live on a different clock. 0 quarterly earnings, 0 guidance. One brutal mechanic. Bottles get opened, supply only falls. When governments start throwing missiles and indictments around, people drink more than they IPO. That shrinking supply makes good bottles behave like a slow physical prediction market on human behavior under stress.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
More chaos, more consumption, less inventory. So you have 2 weird hedges for a stupid world. Prediction markets that let you price probabilities of chaos, and alcohol assets that let you own supply for when chaos drives demand. Everyone else hides in GLD and pretends that's diversified. You now know better. Here's the one mechanism I want burned into your brain. Information shocks travel fast through prediction markets, but slow through physical assets. When a strike hits the news, Polymarket odds move in seconds. That is your early warning radar. If those odds stay elevated and GLD confirms, that's your signal that people with real money expect sustained stress, not a 24-hour headline. That's when long-duration chaos trades start to matter. Not just gold, but real-world scarcity, rare wine, aged whiskey, even high-end collectibles with capped supply. Actionable, not cute. Step 1. Start watching one big, reputable prediction market. Not to gamble your paycheck, but to read odds on key macro events, Fed moves, elections, conflict outcomes. Treat it as a live, implied probability feed. Step 2. When odds on a nasty outcome stay high for weeks and gold confirms, accept that your vanilla 60/40 is not diversified. That's your moment to research real asset funds or platforms that fractionalize whiskey, wine, or similar finite goods. Focus on vehicles with verified storage and insurance, multi-year lockups, transparent index or auction pricing. Step 3. Size it like a hedge, not a religion. Think 1 to 5% of total net worth over time, not YOLO. You're not trying to get rich off Cabernet. You're building assets that don't care what the S&P PE ratio is when missiles fly. You learned one thing today. Prediction odds plus physical scarcity give you a sharper crisis barometer than CNBC and your advisor combined. This is not financial advice, but it is the truth. If your only insurance is an index fund and a sad GLD position, you are underestimating how messy the next decade gets, and overestimating how calm your returns stay. Summing it up: 1. Oil's fake calm, gold's real panic, and insider trading on polymarkets scream that events now move money faster than fundamentals. 2. Prediction markets and alcohol assets monetize that reality through probabilities and scarcity, not vibes. 3. Use the first as radar and the second as long-term ballast, or keep pretending diversification means owning 3 tech ETFs instead of 1. Subscribe, come back tomorrow, and stop letting your portfolio be dumber than your liquor cabinet. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.